Trading without a skill to spot a valid and high quality order blocks can be very risky in making trading decisions. These blocks are often overlooked by many traders, but they play very important role in making trading decisions. Order blocks are mostly used by smart money traders. So in this episode, we'll be covering how to identify valid order blocks in the market step by step, advanced candlestick order block identifications, essential criteria and rules to identify valid order blocks, and how to make order block entries with multiple examples. So if this is something of interest to you, give this video a thumbs up and subscribe if you're new. See you after intro.
What is an order block? So we have two scenarios. We have the bullish scenario and the bearish scenario. So for the bullish scenario, is the last bearish candle before a sharp upwards movement that forms a valid break of structure. And for the bearish scenario, is the last bullish candle before a sharp downwards movement that forms a valid break of structure. With that said, let's move to the psychology behind order blocks. 1. They indicate manipulation areas established just before a significant market event movement. And 2. Traders see these zones as areas where numerous buy or sell orders has been executed. Without wasting much time, let's head on to the criteria and rules to identify valid order blocks. 1. Price must stake out liquidity of the previous candle, being it the bullish or the bearish side. And 2. Price must leave an inefficiency behind and generate an imbalance. The imbalance we mostly look for is a fair value gap. And 3. Price must be unmitigated. Order blocks are for one-time use. That is, we focus on the trading opportunities when price first enters the order block. Once the order block has been mitigated, we do not consider it for future trading decisions. That is, we only trade with order blocks once, just like breaker blocks. And 3. It must lead to a break of structure. That is the very important part. Break of structure or a change of character. Sports a valid order block on the chart. So we have two types. I'll get over the type 1, then I'll show you the type 2 as well. So this is the type 1, the regular one. So price cleared liquidity here with this candle. So clear liquidity with this candle. With this candle, the last bearish candle. So right after this candle, the market created an imbalance. This is the imbalance. So the imbalance here was this candle that pushed price to break the structure here. So this candle, the last bearish candle. So let me clear this one. So the last bearish candle marked the body. It's our other block. We mark the body. So market broke this candle, last bearish candle pushed price to break the structure here, and it has an imbalance, so it's a valid order block. So it's a valid order block. This. So as priced, reversed down from here, this zone to this zone. See, right after tapping into the 50% of the order block, it bought to this level. That is, the order block was valid because it has an imbalance here, clear liquidity, and a broke structure. So that's the type 1. So with the type 2, clear this one. So with the type 2, here is the type 2. So this is the daily candle, that's why it's closely packed. So if I clear liquidity here, liquidity here, but this candle broke through and the clear liquidity as well, but it couldn't close above this one, so it's some kind of resistance, right? But market doesn't have an imbalance here. All the imbalances were closed. It was this candle, this bullish candle that has an imbalance here. So let me clear this. Let me zoom in so you can see. So when you check this candle here, then this one, that's an imbalance. The daily chart, that's why it is closely packed. So was this candle that has an imbalance here and it pushed price to break the structure. This one here. So it's a valid order block. This candle. So you mark the body. You mark the body, then you place your entry at the 50% of the order block. That is price reversed to this zone, then sold off to here. So with the place to put your take profit is the next demand or supply level. That's demand depending on the entry. If it is a bearish entry, is the next demand level. So and if it is a bullish order block, it is the next supply level. That's how to enter trades using order blocks on the chart. So guys, I hope this video provided you with value. If it did, please smash the like button to help us create more videos like this, and subscribe to our channel if you are new.